Hi, my name is Jay Abolofia, and I'm the founder of Lion Financial Planning. I provide advice-only financial planning for a simple flat fee to clients throughout the country. I'm an expert at the economics-based approach to financial planning and the MaxiFi software. Over the last 10 years, I've produced hundreds of financial plans for my clients. Today, I am particularly excited to demo the brand new Roth Conversion Optimizer. Over the next 5 or so minutes, I'm going to talk briefly about Roth Conversion 101 and then demo the tool here for you today. So let's get started. You would start by clicking back on your base profile. Hopefully at this point you have entered kind of all of the necessary inputs to get started with your financial plan. I've created a simple single individual here. Wanda has $1 million in pre-tax retirement accounts, for example, in a traditional IRA. And she also has $1 million in a brokerage account. This would be a taxable investment account, what the program calls regular assets. To get started with the Roth Conversion Optimizer, you'll click Reports. You'll click Maximize Plan, and you will select the option here that says Optimize Roth Conversions and Continue. At this point, you'll have a couple options. The first is, do you want to look at conversions for this individual? Yes. What accounts would you like to potentially focus on or not focus on for the Roth conversion? So you could select or deselect different accounts. What year to focus on for these Roth conversions? The default is 15 years, which I usually start with. Today, for simplicity, we're just going to focus on kind of the next 5 years. And last but not least, you'll see this annual spending reduction limit. If you run the Roth Conversion Optimizer considering all possible plans, and it says, hey, in order to do these conversions, you actually have to reduce your discretionary spending in the next couple of years. You might not actually want to do that. So you can come back here and ignore certain plans depending upon some adjustments here. For now, we're going to consider all possible plans and hit continue. This might take just a couple seconds. It might take a couple minutes depending on the complexity. So a little bit about Roth conversions. The idea of Roth conversions are pretty straightforward. I want to pay more in taxes today to reduce my taxes in the future. And why would I want to do that? Well, I might want to do that because by doing so, I could save a lot, potentially a lot on taxes over my lifetime. The general idea behind Roth conversions is if I'm in an otherwise kind of lower federal income tax bracket this year than I expect to be in the future, then that might be a good time to realize more taxable income. One way to do that would be to do Roth conversions. Roth conversions are just the idea of, I want to move money from a pre-tax retirement account, like a traditional IRA, to a tax-free retirement account, like a Roth IRA. By transferring the money between a traditional IRA and a Roth IRA, I have to pay the income taxes in doing that. And I would pay those taxes from regular assets, for example, cash or brokerage assets. So the idea is pretty straightforward. I want to pay more in taxes today so that I can reduce my federal income taxes or potentially state income taxes over my lifetime. MaxiFi has also highlighted some other crossover benefits or nonlinear effects of Roth conversions that can be incredibly powerful. If I realize more income today by doing Roth conversions, I could otherwise reduce my Medicare Part B premiums, the dreaded IRMA. I could reduce those premiums later in life. I might also reduce the percentage of my Social Security benefits that are taxed in the future. Why? Both of those things go through their own tax brackets. The other one other benefit of Roth conversions is by having money in a tax-free Roth account, I can never have to take required minimum distributions, or at the very least delay the amount of time or leave the money in that account for longer. So I can extend my tax deferral or tax-free growth of that account versus keeping it in a traditional IRA that has required minimum distributions. There might also be estate planning or legacy benefits for having money in a Roth account as well. So let's look at some of the results here. The first thing you're going to see is that the lifetime benefit of doing these conversions for Wanda is about $137,000 in today's dollars. That generates an increase in her discretionary spending of about $5,500 a year, adjusted for inflation, for the rest of her life. If you click on retirement account changes here on the right, you'll see the exact recommendations that the program is providing for Roth conversions. This is an example of go big or go home. The program is suggesting that Wanda convert her entire traditional IRA to a Roth IRA And it's suggesting that she do so over kind of the next 4 years, roughly 140K to $300,000 of conversions in each of those years prior to filing for Social Security at age 70. If you click on compare, you can see some of the other interesting results. As I had mentioned before, in this case, Wanda is paying more in Medicare Part B premiums today for reducing those Medicare Part B premiums in the future. She's also paying more in taxes, right? That's kind of the fundamental idea. How much more? Roughly about $80,000 per year for a couple years more in taxes today, in exchange for reducing her income taxes by tens of thousands of dollars for the next several decades. And last but not least, you can see the federal marginal tax bracket. This is kind of the theory, conceptual idea behind Roth conversions is Wanda, it makes sense for Wanda to realize more income, push herself up into a higher federal income tax bracket today in exchange for being in a much lower federal income tax bracket to come. I hope this has been helpful. Enjoy the new Roth Conversion Optimizer. Let me know if you have any questions, and have a great rest of your day.